All right. Good morning, everybody. Happy Friday. Welcome back to the morning show here on Stock Market TV. I am Spencer Israel. I'm still at an Airbnb at an undisclosed location, but we're back to normal today, more or less. Mom and dad are actually not mom and dad aren't back. Only one of them is back today. The other one is on a flight, but I do have JC Parets here, so we'll bring him on. Our guest today, we got a couple good ones. We got Sam Rowe. We love Sam's analysis. He'll be joining us at around 9. And then we'll have Kenny Glick stop by and around 9:30, 9:40, somewhere around there, give or take. And that will be the show. So we've got some stuff to discuss. We have basically 2 days of I think JC probably doesn't know what's been going on in the markets. We'll have to we, together we can all fill him in on what's been going on in the markets the last couple weeks because he might not know. So we'll fill him in right now and let's go. Tell your neighbors, wake them up, hit the like button. Let's do it.
All right, Mr. Spencer Israel. Who told you that I don't know what happened in the market the last few days? What do you think I was looking
I
at
don't
on
know.
my phone the whole time?
I don't know. It's just a hunch.
Listen, why don't I tell you what happened in the market the last few days? You want me to tell you what happened in the market the last few days? Here's what's been going on. What's really fascinating
Yeah.
is that, the headlines are, man, super gloom and doom. I'm definitely seeing those gloom and doom headlines. Sentiment, you know,
Well, can you blame them?
can I blame journalists for sensationalizing normal corrections?
Well, no,
Yeah,
no, but you understand, right? Like that the price drives the narrative, so you can
100%.
certainly understand.
100%.
So you can understand
Listen, if I
why.
was a journalist who got paid based on how many clicks my article, I would be sensationalizing and lying to my audience as well. It's a conflicts
Right,
of interest. That's why you ignore all that stuff.
right, okay,
But the
okay.
point is, what's more important, in my opinion, is
Yeah.
that while these headlines are scaring everybody, while these sentiment polls are incredibly bearish, right? We're seeing them. Stocks stop going down almost a month
Um.
ago.
y-
The
Yeah.
new lows list peaked on October the 3rd, right? If you want to actually
Right. Right. Right.
show the chart slide 2 here. The new lows list on the New York Stock Exchange peaked on October the 3rd, and that was the same day that the dollar peaked as well. That was not a coincidence, right? Stronger dollar,
Right.
no bueno for stocks. Weaker dollar, bueno for stocks. And I'd like to point out, part of the part of the sensationalizing, part of the the scare, the fear mongering and all that stuff is interest
Hmm.
rates. And what's interesting is that the US 10-year yield has gone on to make new highs in the back half of the month, but the dollar has not. Seeing unusual strength out of emerging market currencies that have actually been rallying all of October. And the new lows list stopped expanding, right? The majority of stocks stopped going down almost a month ago. But these assholes in the media are not going to tell you that. They're going to tell you, oh my God, what do they call it? Markets in turmoil. Markets in turmoil.
No, we are nowhere near a markets in turmoil graphic. Come on, that's at least we're at least 1,000 points away
1,000 points in what?
no, maybe
In the Dow?
not 1,000 points in the Dow, 300 in the S&P.
I mean, listen, it's a market of stocks, and stocks stopped falling almost a month ago, which is fascinating. I mean, it's just math, right? It's not my opinion, but how many people actually take the time to count how many stocks are going down? In my
Right.
experience, very few. You think one of these journalists are going to sit there and count how many stocks are going down? There's zero chance.
Well,
They're
then
too
you
busy
know,
writing their articles to scare people. That's their job. It's a shitty job.
or
I'd
you
rather
don't have
work at a toll booth plaza. That's a shitty job. At least
actually.
you don't have to lie to people.
those jobs pay pretty well. That last I heard.
Yeah, but you're just
You
getting
get
you're just getting
some.
fumes in your mouth, all
Sure.
day.
Oh, it's a bad job, but
At least you get to be nice to
I,
people.
I think they get good benefits there because it's a bad job, right? So I think it pays somewhat well. I heard that a long time ago. I don't actually know if it's true. Anyway,
This is the most
let's do,
important chart in the world right now, I think, there, Spencer.
yeah, I know you've been saying that. Look though, but like you understand because at the index level, right? We've had a tough
The
week,
Dow Jones
uh,
Industrial Average is only down
weeks,
four and a
2
half
weeks,
percent from the
2 weeks,
July peak in the new highs list. Since July 12th,
right?
when the new highs list peaked, the Dow Jones Industrial Average is only down 4.5% since then.
Right, when you put it like that, sure. But if you just looking at the last 2 weeks, right, since that most recent high, right? You can. I'm just
What's
saying.
happened the last 2 weeks? Stop going down.
I'm saying in the
3
index
weeks,
level. I'm
really.
just saying. I'm just saying you can understand why at the index level, what the index is doing, what they've been doing, people are feeling a little woozy, right?
Good.
Or
Good.
yeah,
These are people
yeah.
who are bad at math and haven't gone back into history to notice that this is actually perfectly normal for this time of year. In fact, if stocks were not correcting over the last 3 months and were not acting as messy as they have been, that would be
Wait,
very unusual.
wait, how is it normal? We've been saying the middle of October, or is it middle or early? I forget. That is typically when stocks start to rally. Middle,
Depends
right?
how you calculate it, depends when you start the data, it depends if you're only using pre election years, all of those things. At the end of the
Mm,
day, the best 3 month period of the year starts in November. It's November, December, January. Best 3 month period of the year. The worst time of the year is ending right around now. Sometimes it ends towards the end of October. Sometimes it ends in the beginning of October. Sometimes in the middle of October. Again, it's an average, right? So it's you know how we draw our trend lines with crayons, not with pencils.
mm,
But when it comes
mhm.
to seasonal studies, again, it's not the end all be all. But let's not act like all surprised, like, oh my God, I can't believe the market was correcting at exactly the time that historically it corrects.
Right,
We shouldn't
right.
pretend to be surprised by that. And if you are at a major disadvantage. You clearly haven't done the work. And I would encourage you to look back in history so you can then just go count. I mean, I think just humans hate counting. Just go back and count.
Well, they don't have to count. They can look at their AD line, right? No one is counting per se, right? You could just go look at the right
No,
a
if you
stocks
that's the
making stock
problem. They're looking at an AD line. They're always looking for shortcuts. They're looking for cheat
or
codes. And that's why
or
they're wrong
stocks.
so much because they don't
You
take the
can just
time to
look at
count.
stock. You could just screen for stocks making 52-week highs, 52-week low. I guess that
You
just
can
counts.
do
I don't
that,
know.
but then what about the 6 month highs? What about the 3 month highs?
Yeah,
Like, you
yeah, okay.
don't know what questions to ask the stupid computer if you haven't taken the time. What was it? Pablo Picasso? He said the reason that computers don't work is because they only give you answers. If you don't take the time to figure out
I've
what questions you need to ask, you're getting answers to questions you don't need.
I've never heard that quote before, but I like it.
Pablo Picasso, he was kind of the man, right?
Yeah, he was a cool dude. And it probably doesn't help sentiment that you get a couple of days ago. You had a nice down day for big tech, right? Amazon's going to help turn that around, I think, today because they're trading higher. But it doesn't help when Google trades down 10%. Its worst day and third or fourth worst day ever, right? It doesn't help that Microsoft kind of goes with it a little bit. Amazon went with it as well. So again, it doesn't help things when half of the Magnificent Seven, have pretty tough days. But that was on Wednesday, right? So
I
that
know
was
it's
two
really
whole.
tough. Google's only up 40% this year. Amazon's only up
I know, I
45%
know.
this year. Tesla, what a disaster.
But
Tesla
again, when
only
you
up 70% Tesla.
and maybe I'm making your point for you, but the whole Google has what third or fourth worst day ever, which is mind-boggling because it was down 10%, which is not even that bad in the grand scheme of things. And it just I couldn't when I heard that I couldn't even believe that in a 19-year history of being public, Google had only had three worse days than down more than 10% is wild to me. But I guess I'm making your point for you because you see the headline: Google third worst day ever, right? It's like, what is happening? But again, if you don't look
It's
into
their
it,
job to sensationalize. It's sad, but that's just reality.
well, it's also a convenient fact that happens to be a little misleading, right? But it is,
Well,
so I think that,
listen. At the end of the day, the most important sectors in the market, things like
yeah,
industrials, technology, semiconductors,
yeah,
um, home builders, are all stuck below their former highs from the prior cycle's highs. We've talked about that, and as long as that's the case, it's going to be difficult for the market, particularly at the index level, to make any progress. We said that in July. We're now going into November. That hasn't changed, right? So when it comes to owning indexes, like that's just been a bad trade, obviously, because the components are all stuck below overhead supply. So a consolidation of some kind, a correction of some kind is perfectly warranted, especially during the season where that tends to happen. So the question is, when is that going to shift? When are those indexes not going to now potentially retest those former highs again? We're not even talking about a breakout. We're not even talking about new all-time highs. We're just talking about just another retest of those former levels, right? That's the question. So I think that dollar rollover is the catalyst. It's not, in
right.
my opinion, it's not a want for shareholders. It is a need for the US dollar to fall in order to have that rally, whether it's a year-end rally, whether it's a rally next year, a rally anytime in the foreseeable future. I think needs to come with a weaker dollar. If we don't
Yeah,
get that weaker dollar, it's not coming.
I thought you had said that it wouldn't have to fall so much as it can't go
Yep,
up. I
that's
thought
right.
that
That's right. So
right.
105
Okay.
is really a big
Yeah.
level. This week's lows, really. The market has reiterated just how powerful that 105, 105 and a half level is in the US dollar index. So even though we thought that was an important area, this week the market reiterated just how important it is, which in my opinion increases its importance, right? As important as I thought it was, it's even more important now because the market agrees with us. Remember, the market doesn't always agree with us, but in this case, it's
Right. So
reiterating what we've been seeing.
to answer the question on the screen, what would make you more bearish? It is a rising dollar. That's it. That's pretty
What would
much
make
it.
me more
Right.
bearish? I mean, we've been pretty bearish since July because for the variety of reasons that we mentioned. So,
No. Right now, right? No, right. Not since July. Right now, right?
like, I'm not gonna
Like
like bearish like the indexes, like the S&P 500.
I don't know.
Yeah, I'm not sure bearish on what, like an index. I'm not going to short the S&P 500 here. We weren't shorting the S&P 500 in July either, right? There are individual stocks and sectors. I mean, my whole thing was that there's going to be, and go to the sector performance. My whole thing is that we were going to need there were going to be stocks and industry groups that you can make a lot of money on during this market correction. And
Right.
that has come true fruition, right? We've seen some of the in healthcare, of course, energy, obviously. But I just want to continue to reiterate communications too, for that matter. I want to continue to reiterate healthcare. People have just forgotten about healthcare, like just forgot, like almost like they they don't realize that this thing has been in a secular uptrend like forever, right? Most investors came along in the last decade and a half, right? Like a lot of us have been around for over 20 years or 30 years or 40 years. But if you come around, like you have been in a secular bull market in healthcare all this time, just because it's corrected sideways for the last couple of years doesn't change that. So during this correction, the best time to look for relative strength, in my experience, is during these market corrections. So here are the sector performers since the new highs list peaked on July the 12th and that correction began. Energy is the only one that's up. Healthcare is the second best performer. The Dow's only down 4.5%. Communications is only down 5%. I'm actually really impressed with the outperformance out of financials. Who saw that coming? If I would have told you in July, and we did tell you in July, but let's say hypothetically in July, I said, okay, for the next 3-4 months, stocks are going to correct. Financials are going to outperform in that environment. Even me, I probably wouldn't have said that. I probably wouldn't have said that. Outperformance in financials this whole time. How do you feel about that, Mr. Israel?
Uh, Hold on. I was still on the healthcare thing for a second. And then we
Financials
can talk about.
outperforming during this correction. Do you have that in your bingo
Yeah,
card?
yeah. No, right? No, I didn't. Right, and Yeah, sure. I guess you win this round. Like it's like forever. It's forever hard for me to get excited about financials.
Insurance
I
stocks
don't
are making new
feel
all-time highs. Some of these capital markets, look at CME Group, look
well.
at
Okay.
CBOE.
So actually, that fits into my point about healthcare too. Is you really you can't look at the sector level. You really have to look at the industry level, right? Because there are some really wide divergences within these
Well, I
sectors,
would
right? So
argue to
sure.
look at what's driving the sector returns, which is the large caps, right? It's not biotech.
Uh,
It's not medical devices.
Sure. Okay. Yeah. I mean, that could help too. But my point was like for the financials, for example, yeah, insurance stocks, capital markets, right? But like, who wants to really own banks? You know what I mean? And then healthcare, yeah. So healthcare, yeah, yeah,
You
like
don't want to be in
insurance.
biotechs. Medical
You don't want to
devices
be
have
in
been
biotech. You
struggling.
don't want to be in medical devices.
These
And
health
I
these
don't
healthcare
have.
providers continue to look great. There are drug manufacturers that continue to look great. There are mega cap stocks in healthcare that continue to act well, and those are the ones that are driving the sectors. Right? Remember,
Uh,
as much as we look at these equally weighted charts, we live in a cap weighted world, guys.
Yeah, yeah. I mean, that's true. Yeah, I don't. Well, the problem is all of these sectors these are all large cap ETFs. What you're looking at here, right?
Yep.
So I don't like we're not exactly the most diverse in that regard. I still think it
These
makes
are the
more
most
sense.
important stocks in the world. If you want more diversification, that's up to you. But these are the most important stocks.
No, but my point was, if you really want to get down to it, you really got to go below one level deeper, right? And look at the industry groups. And I don't have all the information in front of me. I'm working off of one screen here, so I apologize. But yeah, again, I get I'm not going to own XOF just because I don't really want to own the banks. You know what I mean? And I don't know
Nobody
anything.
else does either, Spencer. You're not alone on that one, buddy.
Right. And with the healthcare here, let's look at the holdings real fast. I'm just
The
curious about
holdings
it,
of
right?
healthcare, United
Yeah. So
Healthcare, almost 10%.
so like
Eli Lilly,
Eli Lilly's
9%.
10%. Yeah. Johnson 7.5%. Merck 5.5%. AbbVie 5.5%. Pfizer 3.6%. Thermo Fisher 3.7%. Um, I don't know. There's some really bad divergences there. Some of those stocks are not doing well right now. So
But most of them are doing great. And that's why healthcare is holding up so well.
um, I don't know. I see Bristol Meyer on the top 10 or top 15, whatever. Medtronic is in the top 15.
Bristol Myers is no longer in the top 10. Amgen.
It's in the top.
Amgen is.
It's in the
Thermo
top
Fisher
15.
is.
It's in
Merck
the
is.
top 15.
AbbVie
Top
is.
15.
Johnson & Johnson. Eli
Whatever.
Lilly.
Top 15. Whatever. Well, same difference.
Yeah, so it represents 2% of the
Sure.
index. So
Okay.
what?
So this
It can
fund
go to
is
zero and it won't
wait.
matter.
Is every sector ETF as top heavy as this one?
No, most of them are more top heavy. This actually isn't that bad.
I
Yeah,
mean,
Amazon's 25% of consumer discretion.
no. Yeah. Besides that one, obviously, I knew that.
Communications, Apple and
Yeah. No.
Google and Facebook are half.
Besides the big tech, I haven't looked, but I guess I'm referring to like utilities, real estate, banks,
Consumer staples are pretty egregious also.
staples. Yeah.
Yeah, staples 15% Procter and Gamble, 10% Costco, 10% Pepsi, 10%
Wow,
Walmart. So
that's
yeah,
pretty
those
bad.
four stocks represent a big one. So consumer staples are really bad. If you look at industrials, that's the most diversified group. No stock represents more than 4%. But even
Hey,
in utilities, look at Nextera, 13%, Southern, 8%, Duke, 8%. So
all
you got
right.
some, not as egregious as like a communications or a tech, but pretty bad. Yeah.
Hey, speaking of market cap, how about small caps yesterday? Huh? Looking good, baby. Yeah. No.
Well,
Okay.
looking good is a strong word. Looking looking less terrible is
Yeah.
probably more accurate
Sure.
description.
Sure. Sure.
Is it not? Should we do a quick rundown before we bring in Sam?
Yeah. 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 Let's do that.
All right, quick little morning rundown. Dow Jones Industrial Average flat this morning on the futures market. S&P up 17 handles, 40 basis points, with the Nasdaq 100 futures up almost 1%, 125 points. Bond futures relatively flat. Gold futures flat. Silver flat. Copper up 1.5%. Oil up 1% and change. Natural gas up 2.5%. Dollar relatively mixed, slightly down with interest rates slightly inching higher. Volatility index down towards 20 once again. And that, my friends, is your morning rundown.
Wait, did we do any crypto?
We're going to do crypto after Sam.
Oh, we are. Okay.
Yes. It is Crypto Fridays after all.
It is Crypto Friday. All right. Should we bring Sam Rowe on?
Bring him in.
All right. That's Sam Rowe. Definitely a favorite guest. Let's bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Sam.
What's up, guys?
Hi, buddy. How you doing?
Great. How you guys doing? How you been?
Where are you this fine? Is that a real background or is that Fugazi?
No, that's a fake one. I had to move some stuff around in my home, and my background does not look great. So if at any point this fake background drops out and you see a big mess there, it's
wait. How are things for you? I know you had a bit of a water leak issue. Are things okay?
Yeah. That ended up working out. It was just catching people up. There was like one or two floors above me. So I'm in an apartment building in Brooklyn, and one or two floors above me was like a water reservoir that gets, constantly filled, right? They fill the reservoir so that water, they use gravity to, fill our toilets and showers or whatever. But I guess like the meter that, monitors when that thing gets full was broken, so it just kept filling, and all that extra water ended up coming into my apartment. But there have been worse things that have happened in history, and they cleaned it up pretty quickly, and I was able to move back in about 2 weeks. So
all right,
life goes on.
Didn't something similar happen to Duncan? Duncan that works over at Riddle.
Yeah. He was the first person I reached out to. Yeah, Duncan over at Riddle's Wealth Management.
Yeah.
It's funny. Like in New York, like there's always like listen, it's not just New York. Everyone is driven by keeping costs down and keeping profits high, right? So depending on what kind of a landlord you have and what the nature of the emergency is, things get fixed quickly or things get fixed very slowly. So one thing that was good about the flooding that I had in my apartment was it was pretty bad, that it actually affected a ton of units in my building. So it was actually in the landlord's best interest to fix this as quickly as possible, because if you have like a dozen residents not paying rent, then that becomes a financial problem for you. Whereas like, whether it's Duncan's situation or someone else's situation where it's one unit that gets flooded, that might take like 3 months for the landlord to fix, because it's like, hey, it's going to cost more to fix this thing than,
right.
and we're never going to recoup it in rent. So we might as well have this person.
The lesson here, folks, is that incentives drive behavior. Sam, in the old days, in wine country, they used to pay these gentlemen to harvest the grapes, and they would pay them by the hour, and it would take so long. And then one day, one of the landowners decided to pay them by the ton instead. And holy shit, Sam, you should see these guys now. We just had our third harvest out in Napa. These guys are training in the off season down in Mexico. They come up, they're like Edward Scissorhands. They're like, da, 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 da. They're not getting paid. If they were getting paid by the hour, they'd be taking their nice sweet time. Now they're getting paid by the ton. These guys are animals, right? Just classic human behavior. And I want to give you, we got to throw Sam his flowers. I asked you last time you were here, I said, Sam, when it comes to social media, like I defer to you with a lot of these things, certainly better than myself and many others. That Facebook Threads thing had just come out, remember? And I'm like, how long before because I was in the camp that it was going to die eventually. I didn't realize how quickly. I think it died even faster than you thought, Sam, but you definitely nailed that, right?
Yeah, I think so. I mean, there's still some people on there, really trying hard to make it happen. But
You're saying
what?
On Facebook as a company or like users?
No, users on Threads. And here's the thing. It's like a lot of the people aren't on there because they like Threads. There's a lot of people on there because they find Twitter objectionable. And I just don't think that's like the right way to, that's not the right kind of audience or customer you want on your platform. I also did talk to a lot of journalists and people in media who are doing stuff like career development, and people ask me about career trajectory and stuff like this. And a lot of times, these questions come from people who aren't looking for new jobs at new places. They're looking to get out of their current place. And so, the whole idea of leaving, like going somewhere because you hated the last place, is always a bad idea. Whether it's changing social media platforms, whether it's changing jobs, whether it's moving, you might have grown up in a great city your entire life, but you break up, your girlfriend cheated on you, so you decide to move to some random city because it just, it's better than where you were. And then you get that it turns out to be, shit show or whatever. Oh, sorry, I don't know what the language barrier here is.
Oh, you can say fuck.
We drew the line. We drew the line in shit show until about 5 seconds ago. But
yeah, but yeah, getting back to incentives and it didn't make sense to me. Like the user experience, unless they were going to clean up that user experience very quickly. I mean, they had there were two big hurdles for me. The user experience had to get really good and comparable to, or better than what Twitter and TweetDeck were offering, and that never happened. And then two, if it did happen, then you needed to have all those users go over to that platform, right? It's like, you can start like, the next great, professional football league or whatever, but if you don't have any of the players, then no one's going to want to watch, right? So I mean, listen, it's still around, and there's going to be remnants of it. I'm sure they'll figure out how to make some money off it. But I think for most people, it's just not going to work out.
I don't think they're going to shut it down completely like a Google Plus and be like, yeah, all right, that was a bad idea.
Yeah, it's definitely possible. I mean, like as soon as like the as soon as it becomes a drag on the ROI of the business, then they have to, right? But if they can figure out a way to skate by and get some advertisers on there or something, maybe it sticks around like a zombie. But yeah, stuff like Google Plus, Google Reader.
What about the other one? Wasn't there like a Trumper version of Twitter? How's that going?
Yeah. Rumble. What's it called? Is it Rumble? Is that it?
Truth Social.
Truth Social. Does that still exist?
It sounds like it still exists. You know why? I know it still exists. It's because every time Trump says something on Truth Social, someone takes a screen grab of it and posts it on Twitter. So that also speaks to the nature of the utility of all these platforms, right?
But Sam, you could say the same thing about like TV, right? Like business TV, right? There's no reason to watch it ever, because if there's ever anything good, it's going to make its way to Twitter.
Right.
So if there's ever anything on TV that is actually worth watching, which is very rare, you're going to see it on Twitter.
I mean, you're getting into some really heavy philosophical stuff.
But you're the guy, Sam. You're the guy.
Yeah, I mean, listen, like, I could make the same argument about the weekly TKer newsletter that I send out on Sundays, right? Like, there are people who aren't daily followers of financial markets and the economy or whatever, but they know that if they have 5 minutes a week to catch up on markets or the economy, they're going to open my newsletter, and they're going to know that if something mattered that week, I'm going to include it in my roundup of headlines and charts. And if it didn't matter, then it won't be in there. So yeah, to your point, JC, like, yeah, if it matters, it'll show up on Twitter. Because listen, if everybody who were the great curators and the great retweeters and aggregators leave the platform, then that's open field for the handful of people who do stay, right? So yeah, if you're the one person who's also policing Threads and Truth Social, but you're also on Twitter, then suddenly you're going to be the greatest Twitter account. So yeah, like, it's a great idea, but like at the end of the day, unless the customer experience, the user experience is actually good, I don't see how the business, actually.
All right, I want to talk market. I want to talk markets here while we have Sam, right? As much as I love talking about social media.
Hold on, but on the subject, yeah. Make sure you guys are reading Sam's note. Sam's one of the best in the business. We've known each other for a long time. Make sure to drop that link, Spencer. Sunday night. Good stuff, guys.
Well, I want to ask Sam about that, because going through I guess it was Sunday's note, I think, and all these charts about all these bullish tailwinds, things that and that's great and all, but I guess Sam, like, I'm wondering how you are, like, maybe whether it's on Twitter or whether it's on Threads, are you seeing a little bit more bearish activity pick up in like the last week or so or 2 weeks just because of what's happening at the index level?
Yeah. I mean, sentiment just has always been terrible, right? So when I don't think it's so much, from what I can tell, based off of stuff like University of Michigan consumer sentiment surveys, B of A fund manager, like all this stuff, sentiment has just generally been pretty sour for like the last 2 years. And then it'll fluctuate every once in a while, and a lot of times it depends on.
Got a little optimistic this summer. It was a little, some of these consumer surveys like that go back 100 years. Yes, they're still leaning on the pessimistic side because it takes a long time to get it. But the whippier ones, like AAII, for example, those are the ones that move the most.
Yeah, and a lot of this stuff also, reacts to stock prices and reacts to stuff like gas prices and stuff like that.
Right.
So yeah, I mean, the disconnect between sentiment, which I guess falls into the category of soft data, right, and the hard economic data, like actual hiring, actual earnings.
But is that technically hard data? Because those are just estimates.
I knew that was coming.
Is it technically hard data?
I would say it's actual hard data, and I would sort of characterize.
Is it less soft? Is it a little bit harder?
Well, I would put it this way: actual financial transactions is what I consider to be hard data. So if people are actually spending money, that's hard data. If people say they don't want to spend money, that's soft data. Soft data does not really factor into things like it might be perhaps a leading indicator of things, but what actually matters is the actual transaction. What actually matters is if a manager decides to hire people. What actually matters is if someone goes out and spends. What actually matters is if a business goes out and places an order for some new machinery or some new software or some new computers. I think the hard data, both on the economic side and the corporate side and all this stuff, continues to be pretty favorable.
Okay, this chart, this would be soft-ish data, right? These are earnings estimates, right?
Right.
Next 12 months earnings estimates from companies in the S&P 500, right?
Yeah. Okay. So this is a pretty interesting chart, and this comes from of all the Wall Street equity strategists out there, this comes from Morgan Stanley's Mike Wilson, who is sort of better known as being one of the more bearish strategists on Wall Street. But hey,
well, until a few months ago.
Until a few months ago, but then I think he actually flipped bearish again last week. Tactically, everything is tactical, right?
Hey, hold on. So I don't know this guy personally. I'm sure he loves his kids, but so he was bearish right before the greatest 6-month period in the history of the Nasdaq. Then he apologizes for getting it wrong just as the market's peaking. And then after a 3-month correction, then he turns bearish. Do I have that right?
I think that's about right. I don't know. I don't actually follow his I don't follow his tactical calls as closely as I follow his research. Because here's the thing. Say what you want about, a lot of his short-term calls. A lot of his fundamental research is actually pretty good. And sometimes you have to get listen, this chart that we're looking at right now is Exhibit 40, right? People never talk about how deep some of this research is. And this is sort of like one of the many things he considers when he decides to be either bearish or bullish. That said, so this isn't his personal analysis, but this is based off of a survey of the Wall Street forecasters who are predicting earnings. And yes, this has not actually happened yet, but this is a composition based off of bottom-up estimates, right? So industry analysts forecasting the earnings of the companies that they cover. And it's been improving. Look, forward 12-month expectation for earnings has been improving and is at record levels right now. So despite all of the negative sentiment and the negative headlines,
it seems kind of bearish. That seems kind of bearish to me, actually.
Yeah, I was going to say, Sam, this thing was going straight up while the stock market was crashing in 2022, and then it literally peaked just as the new 52-week lows list was peaking last summer. And then, so as stocks, most stocks were rallying in the back half of last year, this thing was still going down. Finally started to go up 6 months after the market bottomed, and it's still going up. I mean, do you really take this
I guess,
as bullish or bearish?
Yeah, listen, whether it gets proven right or wrong, or if it's seen as a leading indicator, that's something that remains to be seen, right? But all of this is to say is that these people are also operating off of the same sort of fundamental indicators that we're all looking at, and they're also looking at specific industry-wide indicators. And listen, as bad as these analysts are at forecasting earnings or whatever, directionally, I think it kind of makes sense, because the expectation that the next 12 months worth of earnings would go to record highs seems to make sense to me. Again, because even just this morning, just a half hour ago, we learned personal consumption expenditures in the U.S. were at what grew to new record highs. Every month, we're learning that.
Over what period? What is that, a quarterly number, annual? How does that work?
It's a seasonally adjusted annual number. So based off of the past month's data, and then you just sort of smooth things out, the annualized rate of spending is at a record high. Adjusting for stuff like, people might slow spending, in the month before, the winter holidays, and they might have slowed, a month after, back to school shopping or whatever. So smoothing that stuff out, we're at record highs. But, it's also confirmed by other data. Again, job creation every month for the last 2.5 years, employment based off of payrolls has grown to new record highs. So that's more people who didn't have jobs, who weren't making money, are now getting money, and that's money that people can spend into the economy. And the economy is run by a whole bunch of business, including the businesses that are traded publicly on the stock market.
Sam, I got a question for you. So I see all, and you know more about the stuff than I do, which is why I'm asking you specifically. I see economists talking about how we beat inflation. I don't know who we is, but how we beat inflation X energy, housing, and food.
No, that was a joke. That was a joke.
I don't think so.
Krugman, I think
I just want to hear what Sam has to how does that matter? Does it what's the thought process there?
Yeah, I mean, well, here's the sort of here's two sides of looking at that. One, yeah, I think it's problematic to, if you exclude a whole bunch of things and try to make an argument that this is representative of everything, that's problematic and that's not good. One thing I will commend about those kinds of observations is that when people usually talk about those kinds of metrics, they are pretty transparent in what they are actually showing. So the fact it's one thing for him to say, we've defeated inflation and this is what the curve of the chart looks like, and then have a chart that just says inflation on it, then I think that's extremely problematic. But the fact that it actually said excluding food, excluding energy, excluding all this stuff,
what else is there, Sam? What else is there, out of curiosity?
There really isn't stuff that you're not spending money on. But JC, listen, we come from the same place, and I agree with you when people talk about the stock market X the Magnificent Seven or whatever you want to call it, or X FANG or X the largest companies. It's I don't think that's the right way to. I mean, listen, I appreciate the conversation and discussions that happen in terms of stuff like X Magnificent Seven or X food prices or X energy prices, because that helps us understand what's going on in the rest of inflation or the rest of the market. That's fine. But if we want to talk about actual representation of the economy or actual representation of the stock market, actual representation of what people are actually invested in, I mean, I'm sorry, but no one freaking invests in S&P 500 equal weight index. I mean, maybe there's a couple of people, and maybe there's
how much volume does that even trade?
Yeah, it can't be anything. I mean, I don't know what it is, but it's going to pale in comparison to
and why on earth? First of all, the S&P 500 is the greatest momentum strategy in history. It buys more of the best ones and kicks out the worst ones. If you're equally weighting that, you're doing the opposite. You're selling the best ones and buying more of the worst ones. Why would anybody Like, why would you do that? It's the dumbest thing I've ever heard. You're watering your weeds and cutting your flowers. Like, why would you do that?
Yeah, I agree. From an investor perspective, from a trader perspective, yeah, it doesn't make any sense. But like, even when you think back to the fundamentals, because I'm a fundamentals guy, right? Like, listen, even this show, is going to be broadcast on stuff like YouTube, which is owned by Alphabet. It's probably operating, if it's not operating on top of Azure, which is owned by Microsoft, or AWS, which is owned by Amazon. It's gonna look. It's gonna get distributed on Apple. Everything. Like,
I'm using Microsoft Windows.
we're exactly. We're using Microsoft Windows. I'm using Chrome right now, and I'm staring at my iPhone because it's getting push alerts right now. And like, so many people spend so much time and money on these gigantic companies. It's like, it's insane to me that we will measure the health of the stock market, excluding all these things that are actually the receivers of all of our money.
Yeah, but Sam, aren't the leaders of the next cycle always different than the leaders in the previous cycle?
Sure. I mean, like, listen, like, we're talking,
but it doesn't mean that the leaders of the previous cycle can't go up. They might not be the best performers again, but they can still keep going.
Yeah, and
they usually do.
I mean, like that, and that actually gets back to what JC was talking about with, the S&P being, one of the great momentum strategies, right? Like, it wasn't a couple, before Magnificent Seven. This might be ancient history to some people, but we were talking about FANG and FANGMAG. And Netflix used to be part of that equation.
Hello, don't you remember the Four Horsemen? It was like Research in Motion, Apple, Amazon, and Google were the Four Horsemen. Like, it's the same story. There's different characters, but
and listen, sometimes no one's saying that Magnificent Seven is going to last forever, but it's very real. When you're talking about the state of the markets today, I think it's a mistake to sort of exclude all of that. But yeah, Spencer, to your point, I think you're right that yes, that's part of the conversation that's worth having. In that, like, well, maybe one of these companies do drop out of this top list, but God, these companies just have such a stranglehold in their categories. Like, I don't know if there's going to be a new browser in the next 10 years I'm going to switch to. I don't know if there's going to be a new search engine I'm going to switch to. Maybe I stop using, AWS, but if I'm not using AWS, I'm going to be using Azure. So yeah, I think it's, it's something to be aware of. But, again, like, in addition to being a fundamentals guy and a macro guy, I'm also a passive, index fund guy. And like, I figure if one of those companies flop and loses business, that money's going to go to another constituent in the S&P, or a new constituent that eventually gets added to the S&P. And if you're,
by the way, I got two questions for Sam. But I want to push back on that. You're a passive index investor.
You gotta let him go.
Sam, you're being a passive index investor is bullshit. You are just not the one making the portfolio decisions. You are handing that off to the folks over at Standard & Poor's, but you're still an active investor. You're not a passive investor. So just
absolutely, yeah.
Number one. Number two. So I got two questions. Ready? How long does it take Bitcoin to get to 100,000?
I have no idea. I'll put it this way. I think that, it's either going to be in a very short period of time, or it's going to be an extremely long period of time.
What a cop out! Give me a date, Sam.
I have no idea.
What do you consider short? This year? Next year?
That?
What's short term?
What's short term? I don't know. When you start seeing spot Bitcoin ETFs start trading, and you have this implied sign off of some big financial institutions. But yeah, I don't know. I honestly have no idea. It's tough. Like, again, I'm a fundamentals guy, and I don't know how to think about intrinsic value for these things that I don't really know what the value is.
There's no intrinsic value. It's not a company. Okay. Okay. Next question. This came up last night over some glasses of wine. Would you take a check right now for $10,000? But if you do, you can never own an Apple product ever again. Or would you not take the $10,000 so you continue to have Apple products?
Continue to have Apple products.
I said the same. And I only have a phone. I don't even have any other Apple products.
Yeah. No, yeah. Listen, it's the grand economic value of it all.
What about $50,000? I give you $50,000 right now. You can never own an Apple product ever again.
Yeah, maybe we're talking. Maybe we're talking.
All
right.
right, deal.
All right, guys. If you want to get Sam's Substack, highly recommend it. The link to get that is in the description on YouTube. He's a tremendous follow on Twitter. I can't speak to Threads. Maybe he's there as well. Really don't know.
Who knows? It's there
But
either. You know, it's just Sam talking to
I
himself.
don't know.
If I
maybe.
say
All right.
anything good on Threads, I'll make sure to copy it over to Twitter.
There you go. All right. Thanks a lot, Sam.
Thanks, Sam. Thanks for being here. He's good.
Thanks,
that was good.
Sam did pick up a very good point that we've never, or at least I've never really mentioned to you. In defensive sell side, right? You can ignore their conclusions, but sometimes the research is actually interesting, right? So if you just look at the research and ignore the conclusions and draw your own conclusions, if it weren't for sell side, how would I know that it was the worst year for rates since the birth of Christ? You know what I mean? So sometimes the research isn't all that bad, even if you don't like the conclusions that
Who has time to read that stuff? Seriously.
No, that's also true. Reading analyst notes is a goddamn chore, and it's not fun. So it's all about the charts. It's all about the pretty charts that they have, and whatever you see on social media is the cream of the crop because it spreads around. So anyway, it's 9:18 here. We'll have Kenny Glick join us in a couple of minutes. Can we talk? Amazon, please?
Yes, please. What happened? Anything good? Anything we should know about?
Yeah, you made the quip last night. So as the headline was that their profit tripled, right? And your quip was that was probably by accident, right? Because
they didn't mean to make any money.
Amazon, famously chose to be unprofitable for like 15 years, right? They just reinvest, all their earnings. But anyway, Google came out with some pretty soft cloud numbers, and Amazon pretty much said the opposite. AWS is strong, came in well above estimates there. And so even though the stock got punished, on Wednesday, through no fault of their own, it is up this morning, right? Last I checked, or what are we up to?
It's also up this morning, no fault of their own.
5.5% this morning. What do you mean through no fault of their own?
Yeah, you think they're the ones buying the stock, driving it higher?
No, but the stock is clearly a reaction to what they said last night.
Yes,
so,
maybe, but
yeah.
it's the buyers and sellers are deciding that there are more buyers than sellers. It's not up to them. Just like when it sold off the other day, it wasn't up to them either.
Okay, fine, but clearly we react to the numbers here this morning. That's why it's up 5.5%. That's why 5 million shares have traded this morning before they open, right? Which is a lot for the pre-market. So
it's because the estimates were so wrong.
No, actually, I would blame everyone else for reacting to Google. For a lot of times people will extrapolate, what's bad for one company is bad for another, is bad for its peer. And Amazon gets punished for Google's mistake. And I think I said yesterday, if Amazon says anything remotely bullish, then it'll be like Wednesday never happened, right? Or whatever, was it Wednesday or Thursday? Whatever day it was, I think Wednesday. So they came out and said that their AWS is great as always, right? And so that's why we're up here. And T-Man, you're right. Yeah, you're right. Amazon AWS, it was in line, but in line is a beat compared to what Google said, right? So inline is good, as long as it wasn't a miss. So you're right. It's all about expectations, and the expectations were low because of Google, and Amazon cleared the bar. So there was a chart. I don't know. Do you have thoughts here?
It's the same thoughts. We're stuck below overhead supply. There's been no reason to own it. We haven't. We're not going to buy it today. Like, talk to me when it takes out those former highs, which was support in 2020 and 21. You can see here, clear as day. It's a messy market. This is the type of environment where I would be looking at Sean. I'd be like, Sean, what are we selling? Selling out of the money calls, selling out of the money puts. But there's not really anything clean there. So we haven't done that either. Like, this is one of those where I look at it and thank the Holy Lord that it is not my problem.
Yeah, and again, Amazon, can also be a proxy for the consumer, right? Just because they're positioned as the largest retailer in the world.
It's
So,
only
um,
25% of the consumer discretionary sector, so
right there you go.
it's got
So,
that going for it.
yeah, I mean, and based on their guidance, they see that it appears that the consumer is strong, at least for them.
Third
So,
largest component
yeah,
of the Nasdaq 100 at 5.3%.
right,
So
right.
kind of a big deal.
Yeah, so I guess what recession? Speaking of what recession, we didn't even mention. Not that you care, but I meant to
Are
ask
we in a
Sam about this.
recession
Sam.
yet? They keep telling me it's coming.
No, I meant to ask Sam, and I forgot. But we had GDP yesterday, which blew away the estimate. So not only are we not recessing or growing,
So is that the case? So the economy keeps getting better, but it's all old data
yeah,
anyway, right?
sure. They'll revise it 2 or 3 times anyway.
Yeah,
They
but that
always
makes
do.
sense because the market's been going up for a year.
Yeah,
Since where were you? July, August, September, October, November, 3,
yeah,
15, 16 months. Stocks have been going up, anticipating
yeah.
a better. I mean, that's perfectly normal. Economic data should be coming in, continuing to look good, right? The market is a discounting mechanism. Remember, the reason stocks
Hmm.
have done so well is because they see good things on the horizon. Right? So, the stock market rips, greatest first 6 months in the history of the NASDAQ. Shocking. There's good economic data coming after the fact, which is lagging. That makes sense, right?
Hmm. All right, let's move away from the Amazon. Let's talk about oil and gas here. We had Exxon and Chevron both out this morning, both with good numbers. Let's see, Exxon's a beat and a beat, and Chevron. Chevron actually missed their earnings per share estimate, but then they announced a nice hefty buyback to go with that. So yeah, how are these doing this
Did the
morning? Let's pull
company
up one of
miss or
those
did the
charts.
analysts miss?
Yeah, right. Well, I know, but so okay, that's a good question. Sometimes the company missed. Like if it's a really really bad, and there is an example of that this morning. It's not Chevron or Exxon, but if it's a really really bad miss, that's the company's fault. If it's like a slight miss, well, that could be the analyst's fault. You know what I mean? But if it's a big one, then I blame the company. In Exxon or Chevron's case, they report the headlines are more or less okay, right? Chevron also announced a nice $3 billion buyback. You like to see that, and the Exxon raised their dividend. You like to see that as well. So
Strazza and I, we were working together over the last couple of days at the Airbnb where Spencer still is right now. Kenny actually coming from the
I'm
Caribbean.
the only one
I thought
here.
Kenny was there. Isn't Kenny there too?
Kenny's here as well. Yeah.
But it's like 4 stories, this freaking house. So who knows where in the house he is. So Strazza and I, we were working together. And one of the things that Strazza and I are doing are building a new version of the Dow Jones Industrial Average. And one of the first decisions that we like, it was like kind of like no brainer, no arguments. And Strazza and I tend to argue quite a bit. No arguments that we're going to bring back ExxonMobil. Because when these fools took ExxonMobil out of the Dow, like at the bottom in 2020, like right before ExxonMobil rallied like 350%. Classic.
I mean,
So we're adding it back and we're adding Schlumberger too.
you can understand, like, because everyone, the future is renewable energies, right? Alternative fuels,
Nope.
right? The future. Well, that's what they've been saying for
Yeah,
20
but
years.
they are
So,
lying to you and the market keeps proving that. It's not the
right.
future anytime soon. Like it's not at all.
Um,
It's the dirtiest energy that hurts the world the most continues to
no,
dominate and will continue to dominate for a long time. I
yeah.
understand, like Biden and Democrats tell you one thing. Isn't it hilarious that all these clean energy stocks have gotten destroyed during the entire Biden administration? And it's the coal stocks and the oil and gas stocks that have done the best. Like,
It
if you
is.
don't find that
It is great.
hilarious,
It
you're
is
not
great.
you're not having any fun.
It is tremendous. Okay, the big loser of the day, not Exxon or Chevron, at least one of the big ones is. And speaking of renewable energy, Enphase, ENPH. You asked, do the analysts miss or the company miss? In this case, the company most definitely missed. The Enphase is down 16%. I think it's actually off its lows of the day, but here's the big one. They gave some revenue guidance for the fourth quarter that was 50% lower than the analyst estimates. Analysts thought that they might give some guidance at around $600 million in revenue for the quarter. They said, nah, more like $300 million in revenue for the quarter. So a 50% miss on their guidance for the quarter that we're in right now, the last quarter of the year. And so that's why, again, renewable energy, not the place you want to be. You see it every
The
single week.
stock's down 75% this year.
Yeah, but it's down an extra 16% this morning.
Oh no, I included that.
Right. No, but it was like you could have said it was already down. Whatever, it was down 70% yesterday, right? Year to date as of yesterday, right? But
I mean, it's down 75%.
Yeah.
So like, if you own Enphase, like, whoo, I mean, anything below 110, 112. I mean, we were looking at that former support. Maybe there's nothing there. This thing, and this is one of the greatest stocks ever, like ever in history.
What?
This thing, what? Enphase?
Yeah.
ENPH is one of the greatest stocks in the history of the stock market. Are you kidding me? This thing in a 4-year period went from like 50 cents to $300 a share. Like, this is that goes down as one of the greatest stocks of all time.
I don't think I knew that.
You don't think I can do that?
No, I don't think I knew that.
Oh, yeah.
Yeah.
It went from a penny stock to like a $60 billion company.
Oh. Good for them.
And now it's down 75%. So,
Yeah. Oh. Well, if you loved it, wait, what are we at here this morning? We're at.
You loved it at 300. You're gonna love it at 80.
Yeah, if you're loving it at 300, you love it at 80. That's where we're at right now. So.
That's right. That's exactly right. Why don't we do a little crypto Friday action? Yeah. We got things to talk about before we bring in the old warlock.
Yeah, we got some cryptos. Okay, Crypto Friday. Here we go. Where are my crypto charts? There we go.
All right, ladies and gentlemen, here we are, a little Crypto Friday action, and we are seeing, what is it, the alligator mouth closing. Yeah. Here we're looking at the correlation between Bitcoin and the NASDAQ 100, which had been as a toiga for very, very long. And then, we had a little bit of a divergence there with FTX imploding in the fall last year. And then this spring, as the NASDAQ and the Magnificent Seven and all that stuff were all ripping, Bitcoin was not, like, at all. It was just trading sideways. And now we're seeing Bitcoin making new 52-week highs. We're seeing the NASDAQ 100 making 4-month lows. And we're seeing that converge, which is really interesting, because one of the questions we were asking is like, oh, is the NASDAQ going to catch down, or is Bitcoin going to catch up? Hey, as it turns out, it's both.
Yeah.
This is a really interesting one here. I'll go to the next one. These are the percentage of coin. These are the top 100 cryptocurrencies. So it's essentially a breadth analysis on the crypto markets. So the breadth analysis down at the bottom, Bitcoin up top making new 52-week highs. But notice what happened at the beginning of the year. We had that momentum thrust, a huge spike in the percentage of cryptocurrencies in the top 100 that were getting overbought, which is evidence of an uptrend. And now we're obviously seeing that starting to spike once again as Bitcoin is making new highs. This one continues to act well. I wanted to just mention quickly the Bitcoin market cap right now is 670 billion, which would make it around the 6th or 7th largest company in America. Ethereum sitting right around 215 billion. Binance still at 35 billion. Really, really interesting, with Ripple at 30 billion. So the market capitalizations continue to be very impressive. Right now, the total crypto market cap just hit new 52-week highs, sitting at 1.3 trillion, of which about 670 of that, or essentially about half or so, is Bitcoin. Really, really interesting. Here's the Fibonacci extensions for Bitcoin that I think kind of really put things in perspective. That 3031 level was a big one. We've been highlighting it all year, of course, or since the spring at least. No, all year I suppose we've been highlighting it. 30.31, that's the level. So next up, I think it's 46, 47. There's a lot of market memory there. You know, we're right in that range now. Support at 30.31, resistance around 46, 47. So we're near the lower end of that range, kind of hovering right now, right around 34,000. So to me, that's what I'm looking at. And then I wanted to show slide 9. Show slide 9 here. So what we're looking below is the crypto index, which is an equally weighted chart of the top 100 cryptocurrencies that has been underperforming, right? It's been the Bitcoin dominance that we've seen. And when Bitcoin is dominating and it is outperforming the alts, that historically is a flight to safety, right? Bitcoin dominating, as good as that might seem for Bitcoin.
A flight to safety in the world of crypto,
That's right.
but not in broader markets necessarily.
That's exactly right. That's exactly right. It's a good point. So within crypto, if Bitcoin is really dramatically outperforming the altcoins, that historically comes in an environment that's not great for crypto. So looking at this breakdown here and potential reversal in the crypto index relative to Bitcoin, we're seeing more cryptocurrencies getting overbought, almost none of them getting oversold. If that crypto index starts to outperform Bitcoin, I think that can be a major tailwind for cryptocurrencies in general. And I think there'll be opportunities at the individual altcoin level. So if you're looking for the juice, if you're looking for the beta, you don't have to go into the equities market to get involved with Mara or Riot or, you know, MicroStrategies. And if you're looking for the juice, you can actually get it on chain in the altcoin. So that's something that could potentially be changing for the first time in years, actually. Bitcoin not dominating, which will be, you know, in my opinion, a really bullish catalyst for the entire space.
All right. Well, we'll have to keep an eye on that relationship and see if that trend changes. Should we bring Kenny Glick on?
Please do.
He's here.
The Warlock.
All right, Kenny. I don't have a fancy bumper for you, so I'm just going to bring you on.
You're not going to ask bumper?
We got to use it for Sam. What's up, Kenny? There he is.
Oh, Jefferson.
What's up, boys?
Yo, the house is nice, right?
I'm in an undisclosed location as well.
Undisclosed location, that's right. And did you use the sauna this morning?
Oh, sorry about
that. Did you use the sauna this morning?
No, not yet. I might go in there.
What's the matter with you?
I woke up and immediately started trading ENPH. I love a disaster.
Well, I think you would have traded it better after 20 minutes in the sauna.
Ah, yes.
If you have a sauna, use it.
I know. Not too often you get to have your own sauna.
Enjoy. When we booked the Airbnb, I didn't even know we had a sauna.
Nice.
Until Strazza's like, yo, you should check out the sauna.
Yeah, I haven't got up for my... I am using the espresso machine. I'm on my third one.
Nice. How talk to me about this morning's trade on Enphase. So you see this thing just getting the shit kicked out of it and you're like, buy it? Or what was the entry?
Absolutely. So, you know, I'm having a hard time showing my screens on the laptop, but you know, again, as soon as I come in, I just look at who reported. We were looking at SEDG last week, and I traded Enphase in sympathy. They were kind of moving with each other. They both got destroyed. So again, this morning at 6 o'clock, you made that first attempt to get over the VWAP. It really wasn't till about, you know, 7:45 where it cleared the range of the top of the morning range. So basically, it was a new high breakout from this morning. And if you look yesterday, the price it broke out from was the bottom of the range from the catastrophe from last night, so around 77.50. Once it got over 77.50, I was bought at 78, and it retraced back to that $80.80 range. And once it started ticking down, I sold it at 80.5, and you know, again, a little day's pay right there. And right out of the open, it exploded. I'm not in it right now, but you know, a little traded in the pre-market. That's all we needed. And I'm just watching, you know, again, the last couple of weeks, obviously we're in this bearish moment. So UVXY has been a real tell for the market on a Friday. UVXY is normally red on Fridays. It just has that contango and usually gives it up.
Why don't you explain to us mere mortals what a UVXY is?
Ooh, UVXY, friends, is kind of, a lot of people think it's just a, you know, triple leveraged or double leveraged version of the VIX. It's a little bit more than that. It's kind of an S&P put gauge. It's a fear gauge. And it usually dissolves in price because it's built to just reflect the fear of the day. And once that fear dissipates, that stock tends to go down. Look at a long-term chart on UVXY, you'll get a kick out of it. It just reverses and split reverses. So when this garbage product, this product that's actually built to go down, when it shows real strength,
that doesn't make it a garbage product.
Well, no, I know. I'm just saying for long holders, people are
but
still.
if you're holding this as a long-term holder, you're an idiot.
Right. But people still think you can hedge your portfolio by owning this long-term. It is not a long-term hold. That's why I call it a garbage product. It's a fantastic product.
It is. I was going to say, it does exactly what it's supposed to do. What do you mean?
Yes, I watch it. I watch it every day. This is how I get an idea of whether or not I want to stay long or stay short. So if you're thinking this market's going to roll over like it's done the last couple of Fridays, watch the UVXY. If UVXY gets above 1855 today, you might want to start getting cautious on your longs. Now, again, if it goes green and you're seeing this thing above 1886 or, back into the 19s, chances are this market's going to go right back into that downtrend and everything's going to roll over and we're going to get that fear right into the close like we've had over the last couple of weeks. So I'm rooting for an up day and I'm a perma bear. So again, I'd like to see this market stabilize down here. The Qs have already got to where I thought they would get to, that 346 area. We overshot to the downside. I think there could be a little bit more room to go, but I'd like to see them put up a fight. I think the Qs have to see 339.50 before we get this, inevitable. I don't know if you say inevitable at this point, but that seasonality rally that right now is, again, people are starting to doubt it. We're right at the point where the rubber band has been stretched enough to the downside where they could let it go. We could get a decent rally. I'm not convinced we're going back to all-time highs. Obviously, I'm not seeing it.
In what, in the S&P 500?
I'm looking at the Qs. A lot of people thought we'd see back above 400 by the end of the year. I'm in the camp that is not going to happen. I'd be impressed to see it over 387. I think we're in the trading range for the rest of the year. And again, I've been wrong about it because I am usually bearish. So if this market does something to surprise me, I'll just get involved. The QQQ 361.20 print from the Google Microsoft spike before it rolled over, that's where I'll get bullish again. 361.
What's the number?
361.20. We had this aftermarket spike on the Qs. I want to see it clear that hurdle, and then I'll get bullish. But right now,
from Tuesday, right?
Yes. So anything below that, I'm still bearish the market. And again, I'm just looking for it to roll over. And if we roll over, there's a lot of room to the downside. The 339.50, I think, puts up at a fight. But if you go back to the May breakout on the Qs, I think we might have to go back and test that May 5th area where we really took off again. Between May 5th and May 24th, we had this really nice battle. The bulls won. That's what we took off. The average price around there is around 329. So I wouldn't be surprised to see 329 in the Qs either. And then we get that rally. And if we're making predictions here, I think the Qs close around 365 at the end of the year. So get a nice little smackdown, rally into the end of the year. I definitely do not see them going past, that 387 this year. But again, we'll see what happens. But
yeah, because it doesn't even matter, because to your point, if it starts to break out 360 just to keep things cleaner, around 360, right. Is that right?
Yeah.
If we're above 360, the squeeze is on, and you're going to be bullish in that environment. So it doesn't matter where you think the market's going to close today. Like, it's fun to be like, right? Right. It doesn't actually matter.
Right.
Yeah. No, I agree. I couldn't agree more. I would even be more aggressive than that and say 355. Your 350, your 359, 360 is probably a little bit more conservative. And if you have a bearish tilt, that makes sense for you. I actually have a bullish tilt, so I would be more aggressive on an entry in the Qs. So I'm looking at it lower, right? So that's, I'm looking at those lows. So I'm looking at, right? 354, right? And what about sentiment? You don't think people are overly angry right now?
Well, again, normally we had this conversation about a month ago, again, when the world events shouldn't really dictate what you do, but they do. They make, right now, there's a reason to be bearish because of what's going on in society. Usually
what's going on in society that is reason to be bearish?
Really? I mean, I
yeah,
think.
Tell me. What is it that's so bad about society that we have to be bearish equities?
I think that we're signing up for World War III right now.
I know, but historically, that's good for stocks.
I know, but this time I feel like it might be a little bit different. But I think
did you just say this time is different?
This time is different, right? Because we're not going to just, okay, war's here, let's go crazy, shock and awe, we start rallying. Listen, my wife was giving birth to my firstborn while they were dropping bombs, and I'm calling my dad to buy the Qs. I'm with you. I understand. It's just that right now,
you're buying the Qs while your wife's giving birth? That's aggressive. It's aggressive trade. It's aggressive.
And check out the chart, April 2003. Nice entry. Right there. They were dropping bombs. It was shock and awe. My wife's giving birth, and I'm on my phone with my dad. Let's get some Qs, baby. So yeah, I understand buying into in that moment, but right now I think we need that one more whoosh down to really get the fear gauge going, UVXY into the 20s. And then that'll wipe everybody out. And then I still think we're going to get that year-end rally. I just think
VIX to 20 is not enough. You got to see VIX at 30.
Yes. I want to see where people actually say, oh, this time is different. And it's never actually different, but that's what's funny about that saying. This moment right here, I don't know if we've been, on the precipice of war, like the way I feel like we are right now. And it's a nervous feeling. And again, I don't want to be long equities. I'm a perma bear anyway, but I don't want to be long equities in this moment. It doesn't mean I'm not going to go crazy long when the turn happens, just like you said. So again, I could be a bear all I want, but I've learned from 2012 and 2013, you cannot fight the market. And I'm not going to attempt to do it this time. And, again, just like in May, that's why that May pivot was so significant. That move is normally where I was going to get more bearish. And the market said, don't do this. And I quickly got out of that position and went long, May 24th. And we had that beautiful rally. So I just think that factor in that May area, again, give me a smackdown and then I'm going to get bullish again. But right now, I'm just I'm just a lowly day trader. I just make my ENPH trades and hang out. So I'm liquid.
It's important that you talk about that because you have your thoughts on what the market could and should do and might do, but none of that is impacting what you're actually doing.
Exactamundo, my friend. Yes. So again, give me a disaster and I'm a buyer. You get too elated, I'm a seller, just like Microsoft. I couldn't believe how it stayed up that first day. And then obviously the bears took it over yesterday and smacked it right back down to where it came from. So again, I'm all about the action, and that's why I love earnings season. I'm very bearish on Apple. That's another reason I'm not too excited about this market. For the first time in a really, really long time, I walked into the Apple store and I didn't have that overwhelming desire to buy something. And I love their phones. I love their products. I'm on my MacBook right now. All I have is Macs now at home. I'm just not feeling the love right now. And I think that's going to translate into, a bad report. And they might not have that guidance that everybody's looking for. And without Apple, I don't see the Qs, doing anything, obviously.
And what about volatility? Are you selling any volatility? I mean, we sold the crap out of these Microsoft calls and puts, just, nice and juicy, traders getting chopped up. I mean, I'm happy to take their money.
Oh, I've been selling. Here's what's funny. I am looking for more volatility, but at the same time, I understand UVXY so well that you can sell premium on calls going out over 120% out of the money. So I've been selling January $41 calls every time the UVXY spikes. Because if you're going to give me $2 for a $41 call, 45 days from here, I don't care how bearish you are in the market, chances are UVXY is not going into the 40s. And if it is, we are in real bad shape. So every time it spikes up, I don't short UVXY anymore. I just short those $41 calls. And they were above 212, 220 just the other day. And then they come back to 140.
And these are what, weeklies? And these are weeklies?
These are the Jan 41 monthlies on UVXY. I go out to the furthest one. And back when UVXY was in the 30s, you were able to go out to the 200s 3 months out and get massive premium. That trade has kind of compressed, and now this is only a double leverage product.
And why is that? Because people are going so far out to hedge their portfolios in case of disaster, and you could just collect that income.
Absolutely. And also people really think that this might go back. There are a lot of people that still don't understand UVXY. They look at that chart and they say, oh my God, this thing could go back to 28 billion. They really think that might happen. So that's the last one. That's their lotto play. They go to the last strike price, whichever the highest one is, and that's and you'll see that one
theoretically will pay off if it's 1929 again.
Right. And again, that one is the more active one compared to the lower strikes. People just love that last call, that last one. That's their lotto play. By the way, I'm selling it to you guys, all you lotto players.
Yeah, but it's not so much a lotto play as it is the eliminating that tail risk.
Yeah. I mean, but the idea is that it's the last one. That's the cheapest furthest out they can go. So that's
You're an
the one.
Insurance salesman.
Yeah.
People are trying to buy insurance, and you'll sell it to them.
Yeah.
Sure, there's nothing wrong with that. I like that. I respect that.
So
hold on. So UVXY is just a double leveraged VIX, essentially.
Yeah, now it's double leverage. Yeah, but it's more than the VIX. It's like it's an S&P. They've basically factored in. I forgot if you call them. There's a 300-page prospectus, but it's a little bit more than just double the VIX.
But for all intents and purposes, basically.
Yes. And you want to see it down on a Friday to sustain a rally, because usually Fridays, if UVXY is green on a Friday, that is a really, really big tell that the market's going to get hammered later on. So right now, we're just hovering, so that's good for the bulls.
Yeah, VIX is down, back down to 20.
Yeah.
Interesting. All right, Kenny, you're the man, dude. It's good hanging last night. You and I are going to grab coffee in a little bit. Great to see you. Great to see you last night. Look forward to seeing you again.
I'll see you in a half hour.
All right.
Later, guys. Good luck.
All right. Thanks, Kenny.
Kenny Glick, fan favorite. A lot of fan favorites on the show today.
No doubt. Okay. We don't really have anything to discuss today from the hot corner, but we have a hot corner adjacent thing I want to mention. When we do these hot corner segments, we are, of course, looking at notable insider transactions that are A, happening in the open market, and B, not planned, right? We're not looking at insider buys that are part of a 10b5-1 plan where they announce that they're going to be buying, or they're announced that they're going to be selling, and they do, and then over the course of a year or two they do that, right? We're not looking at that, but we did have an interesting headline about that here overnight, and confirmed this morning via in 8K. Jamie Dimon, for the first time in his life, he is one of the B51 plans. So he's going to be selling JP Morgan shares for the very first time. So this is not notable as far as hot corner is concerned, but it is notable in the sense that probably, I guess, they said beginning next year. So starting next year, you're going to see headlines about Jamie Dimon selling stock, right, in JP Morgan. But again, it's pre-planned. He's said this is going to happen. This is not what we look at. I'm only mentioning this so that when you do see this headline in January or May or whenever the headline happens, you know that this is old news, right? The market may not treat it as such, but it is old news. So keep that in mind next time you see this. I think he's got, what does he have? He's got like 8.6 million shares of JP Morgan, worth about 1.1 billion, somewhere around there, right? So I don't know. I just thought that was interesting. Again, these aren't.
You want to hear a fun fact?
Yeah.
Since 1950.
Yeah.
Every single dollar made in the Dow Jones Industrial Average has come between November and April. So in other words, since 1950, if every year.
So if you buy in November and sell in April.
If every year since 1950, you bought the Dow Jones Industrial Average on May the 1st and sold it on Halloween, you would be down. Since 1950, if you would have done that every year. I think after like the last couple of years, you might be slightly in the green, like slightly, but essentially you'd be flat and it would have made no money at all. Isn't that interesting?
Similar headlines about the S&P, and if you if you go home flat every day at the close, and then if you buy the open and sell the close every day, you're up like marginally.
Yeah.
Right? But if you hold overnight, that's where all the juice is.
Well, that makes sense. That makes sense because the U.S. is the last market to open. By the time we open, the market, everything's already closed. Like the day already happened.
Yeah. Or they're soon to be closed, right? Yes.
Right. Exactly. So it's like the last, it's the last go.
So the lesson here is don't buy the open and sell the close. Maybe just buy the open and then buy more open. And if you're gonna do the Dow, maybe don't buy in April and sell in November. Do the opposite, right?
Yeah. So in other words, the reason I made that point was because that period where every dollar in the history of the Dow Jones Industrial Average has been made over the last 73 years starts on Wednesday.
So you're telling me that for half the year the Dow sucks? Is that what you just said?
On average, since 1950, you are flat or down. Every dollar over the last 73 years in the Dow Jones Industrial Average has been made between November and April.
For half the year, the Dow sucks. That's good to know. Did not realize.
We knew that already.
Okay.
It's not like a secret, but like that's the actual mathematics, which is fascinating.
Yeah. All right. Cool.
Page 200 on the Stock Traders Almanac. No,
that's where you got that from. All right.
No, but it's in there. I haven't gotten to that page yet on this year's almanac, but the data's there.
Okay.
It's fun fact.
All right. Should we do some recess? I think
we should. I got a question for you.
You got a question for me? I have a bone to pick with you all as a group, but here we go. Let's do some recess.
Okay. All right, Spencer. $10,000 given to you, but you can never have another Apple product for the rest of your life. Your answer is no.
Hard no. And hard no. Not only that, but I don't even understand anybody that would say yes.
Okay, what about 50,000?
Yeah. I mean, now we're talking. Now it's I gotta go talk to the wife, because now we gotta have a conversation, right?
At what price do you not need to talk to the wife?
Oh, $100,000. I'm
$100,000. You take the deal.
Hey, I'm $100,000. Not. Don't even think twice. Give me the money, and I'll never own an iPhone again.
Because $100,000, reinvesting the compound returns over time, that $100,000 is going to add up to a lot more.
Wait a minute. You know what this question is unclear about this question? Can you own Apple stock? That's not clear. Because if the answer is no, then it's going to take a lot more than $100,000, right?
Wow.
What do you mean? Now I can't own the S&P 500. So.
Well, you have to do like that thing. What is that? Canvas or something where you take Apple out.
Direct indexing. Yeah, that seems like a pain in the butt. I don't want to do that. So, but if it's just the products, then $100,000.
And then who came up with this question? This was a Warren Buffett thing, right?
It was a Warren Buffett thing, and then the point he was making was how embedded. And actually, I think I forget what the results were of Warren Buffett's. I think he did this at like one of his shareholder meetings or whatever. But like a lot of people said that they would take the money. But I think his point was that they're so embedded in society that hence why Apple is his largest holding, right? Because we can't live without it. You won't take the money. So anyway, interesting question.
We should do like a chart summit in Omaha, Nebraska for the shareholders meeting, and we'll do like a side event on the side. Cool, right?
A couple of years ago, I bought one share of Berkshire Hathaway for the sole purpose of getting to go to the annual meeting, and I haven't been, so I would very much like to go. I own more than one share now.
You have to own an A share, or does a B share count? What?
I don't own an A share, JC.
I don't know. I'm asking the question.
I own.
How much are the A shares? Like $150,000 or something?
No, it's way more than that. It's like $250,000. Something.
It's $500,000.
Thank you. Okay, my $500,000.
Yeah, I didn't realize. I rarely look at the A shares. I look at the B shares.
Yeah.
That's really interesting. $500,000. Wow.
Okay. My recess is hanging out with you all for the past couple of days. Has unearthed a new pet peeve that I did not know that I had. thanks to you guys. And my pet peeve is when people don't close doors to the outside. And I don't know what it is about the three of you. You're not the worst offender, but you are an offender.
No, but I left them open on purpose because it was hot as hell in there.
Okay, but the thing is, you guys complain about flies, and I don't know if you guys have seen, but there's been a fly flying around my head all morning.
We haven't seen it.
You complained about the flies being in the house, and then you leave the door open.
Yeah, because the flies were already in there. So what's the difference?
More flies come in. So I come down this morning. I come downstairs, and it's like noticeably colder down here. And I'm like, why is it so cold down here? Sure enough, the front door is wide open. These guys left for their flight at like 5 in the morning, and they just did not close the front door. And like, do you just not close doors? I feel like I spend the entire time here just following you guys around the house, closing doors behind you.
Well, to my credit, I was leaving them. To my credit, I was leaving them open on purpose. So
I don't. What?
I was. I can't speak for the others, but for me,
it's just.
I'd rather have flies than hear Strazza complaining about how much he's sweating.
I don't understand it. Like, do you not close your doors at night? Like
I close my doors at night.
Thank you, Sean. These guys are animals. I don't know how. You see what I have to deal with the last day or so? I don't know how Sean survived for 3 weeks in Asia with Steve and Giancarlo. These guys don't close doors behind them. It's driving me insane.
Well, we're gonna have to ask them why they were leaving so many doors open. I have a good reason.
Okay. Like I don't know about you all. Like I lock my door. Even if I don't need to lock my door, I lock my door every night. Like doors are just locked. That's just how I grew up, right? So the idea of leaving the door open, like to the outside, is like blows my mind, right? Like I would never do that in a million years. I don't know.
Yeah, well, you're in the middle of nowhere. Like nobody's gonna go to the.
That makes it worse, JC.
No.
I don't need to wake up to a bear in my kitchen. Okay.
There's no bears there, man.
How do you know there's no bears here?
Because I live 10 minutes away from that undisclosed location. There's no bears, bro. Relax.
Okay, or a deer. This isn't freaking Snow White. I don't need animals coming up to my kitchen.
You're not gonna walk into the house.
Whatever. Anyway, all right, that's what I got. I didn't even know I had this pet peeve until yesterday, right? So thanks for that. Now, I'm done. Okay, so that's it for the show here. We do have What the Fick at 12:30. Ian and I are talking about certain commodities going parabolic, shall we say? Talk about
Cocoa.
All right, spoiler alert. Jeez, that's
if you're not watching cocoa futures making new highs, this is like 40-year highs or something in cocoa.
Well, you'll have to tune into What the Fick at 12:30 to find out. How about that? So that's what we got. Thank you to our guests today. Thanks to Kenny. Thanks to Sam. Thanks to all of you in the chat. We'll be back with the full crew on Monday. Everyone have a great weekend. Go make some money and get outside. It's supposed to rain here. We haven't had a weekend without rain in like 2 months. So get outside while you can. Well, it's still warm, I should say. See you everyone.
All right, guys. Adios.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off.